Hi everyone, welcome again to another financial analysis video with myself, Moeed, Amin, and Ted Wayman. Today we have an interesting company to look at for you, a company called Arrival. Now, Arrival are a British electric vehicle manufacturer, and they primarily focus on lightweight commercial vehicles. So think like vans, buses. They're planning for producing cars, but they're going to focus more around the ride-hailing or car-sharing elements of the car business. So a bit of an introduction about this business, because this is going to be quite important compared to others. It is really an interesting business. Before I go into that, though, don't forget to like, share, subscribe. Leave a note in the comment section if you want to request us to look at a company for you. We did receive this as a request, actually, from one of our viewers, and interestingly, Automotive Equipment Solutions. So they're certainly within the industry, and probably that's why they're so interested in this. So here's your video. Just some notes about Arrival before we go into the financials analysis and the stock market movement. They floated earlier in 2021 at a valuation of $13.6 billion. But here's the interesting part. I mean, it was through a reverse kind of flotation, a reverse merger, sorry. However, that's not the interesting part. What's really interesting is that they are yet to produce a single product. And yet they had such a high valuation, which gives you an indication of some excitement around this. So we're kind of going into this whole Tesla territory, which we looked at in the past and looked at their financials. But they have received letters of intent for 59,000 vehicles. Now, what's important to note here, and this is part of your research, letters of intent are by no means binding. So the key thing here will be converting those letters of intent into actual sales. But they have received letters of intent from some big brands such as UPS. And I think they requested about 10,000 vehicles to start with. So worth noting that, but even that contract could be anything upwards of $1 billion. So certainly quite lucrative, but a very big if. So the bus trial productions will start, I'm just looking at my notes, at the end of 2021. Their van productions, they won't begin until Q3 of 2022. And even the bus productions, those are just trials at the end of this year. But the actual full-blown production won't occur, at least planned, until Q2 of 2022. So no products have yet been produced, all planned. They've had letters of intent, but by no means are they binding. And they certainly have a lot of way to go. But they have been valued at, when they floated, $13.6 billion. Now, the stock market right now, the stock price, they floated at just over $9 in February of this year, February 2020, I apologize. They're now at 14. However, there has been quite a bit of movement. So if you invested in January, you would be sitting on a loss. But stick around, because we're going to look at that stock price movement for you and correlate that. Not necessarily correlate that with the finances, because what we're looking at is retrospective, but certainly would be interesting for your thesis. So Ted, let's have a look at the finances of this interesting business. They're riding a really huge wave in terms of industry trends and socioeconomic trends at the moment. What have we found out about them?
Well, yeah, good to see you, Moeed. Yeah, so this is quite an interesting business. So digging around, so first of all, I looked at here in the UK on Companies House to see if I could find the financial statements for the business, and it suggested that the accounts were overdue at Companies House, which is a little bit odd that a listed company is late in filing its accounts. Anyway, so I then kind of looked on the you go to the website and go to the investor section, and actually you can find their annual accounts there. Now, I've got not the latest set of actuals. It's not the Form 10K, but it's called the Form 20F. It's actually an amendment form, this one. And this does have the financial statements. Okay, so they recently, as you mentioned, recently listed through a reverse into on the US stock market on the Nasdaq. So in effect, they they don't have a big history of financial statements. Anyway, what's then interesting is that if you actually look at the financial statements, you'll notice that we are dealing with Arrival Luxembourg. Okay, so this is a UK company based in Luxembourg that is traded on the US stock market. So make of that what you will. Anyway, so the numbers here are in thousands of euros. That's just to kind of to highlight that. So let's look at the numbers anyway and see exactly what's going on. And as you mentioned, sales are zero. Okay, so there is nil sales. Top line is nada, nothing. There it is. There's the top line sales. They didn't even actually mention the word sales because they are zero. And therefore, cost of sales by definition is zero. And therefore, all you've got is the cost of running the business. You've got the admin costs, which is known as the sales, general and administrative costs. So rent, rate, light, heat, and all that kind of stuff. R&D costs, which is kind of, which is sort of producing and kind of checking out and making sure these new vehicles are all going to kind of work and go in the right direction, etc., etc. Bit of impairment expense. Down here, you'll notice the finance cost. These finance costs, this is the interest on the debt. Increasing finance cost suggests increasing levels of debt. So we should be able to see that in the balance sheet, which is quite interesting. So at the end of the day, they're a loss-making business, and all of the costs that they are, because there are no sales, all the costs they incur are straight on the bottom line as a cost of the business. So margin analysis is basically irrelevant. 83. We're in thousands of euros, so 83 million euros 2020, up from 48 million, up from 30 million. So these guys are, and hopefully, they're going to start actually, they're going to sell a vehicle. And once they sell a vehicle, your point about the letters of intent, obviously very, very relevant there. Once they've sold a vehicle, then we can actually start to look at the margin that they're making. Anyway, so if we compare them to Tesla, these guys are definitely behind the Tesla curve. At least Tesla are now producing vehicles and they are actually making a small profit. So here is the balance sheet. Once again, we're in thousands of euros. So the total assets are about 450 million euros. And what have we got here? So mainly we've got these intangible assets and goodwill. So goodwill arises on acquisition of other businesses. So they'd have bought some other, other businesses, maybe to access certain technology, for example. They got some property, plant and equipment. This is the kind of the manufacturing equipment they're going to be using. What's interesting here, inventory. Okay. They've got an increasing amount of inventory. So, it sounds to me like either they're stockpiling spare parts or they've actually got the vehicles. They just haven't managed to sell any. So I'm just quite interested, for a company with zero sales, they should be sitting on inventory of about, 12 million euros. The other thing which also jumps out to me is this line here, which is trade and other receivables. And again, if you've got trade and other receivables, you kind of expect that, you got sales there. So how can you have a trade receivable if you have no sales? Well, the answer we can see, we can have a look at notes 11 and 10b and see if those shed any light for us. So here we are on note 10b, and you'll notice that the receivables, where they've got some tax receivable, some VAT receivable, loans receivable. Of course, there are no trade receivables. So that kind of makes me feel a little bit happier there that they, interesting though that they've got these loans receivable. They're obviously lending money out, and the inventory, the raw materials and consumables. So there's no finished goods there. So lots and lots of raw materials ready to make the actual vehicles, but no vehicles actually have been made and are ready for sale. Let's return back to the balance sheet. And looking at the bottom half of the balance sheet, we've got our our current liabilities down the bottom here. So up to 39 million. If we look at that compared to the current assets, liquidity does not appear to be a problem at all. And we'll notice that these guys are sitting on quite a lot of cash. Okay, so they got quite a lot of cash sitting there to burn through. Liquidity isn't an issue, or certainly short-term liquidity. And we also notice a big increase in this debt. So the borrowings has gone up. So they're funding their business as much as anything through the borrowings, as well as through the shares. And you can see here the share premium has increased significantly, and that reflects the fact that they have been to the market and raised additional funds. So there's our balance sheet. This is the movement in equity, just to say that they aren't paying any dividends. Surprise, surprise. I think we could probably work that one out for ourselves, though, without actually looking at the movement in equity. So cash flow, coming on to the cash flow, they are burning cash. They're burning quite a lot of cash, 77 million, up from 35 million, up from 19 million. They are investing. Investing is a lot of that is about buying other companies. So they're buying either intangible assets and goodwill. So goodwill arises on acquisition of other businesses. They're buying intangible assets, which may be intellectual property rights, licenses, etc., etc. And they are, also buying assets. And how are they funding it? Well, they're funding it through the issue of shares. So here we see share issues. Previously, in previous years, it was this contribution of Kinetic, without any issue of any shares. I'm not sure exactly how that, what they get in return for that. And then we also notice here is the these two numbers exactly the same. So there's a lot of refinancing going on here, which is quite interesting. So we look at the increase in debt, the increase in the interest. Looks to me like, that isn't a physical borrowing. What they're actually doing is using finance leases. Okay, so if we go back to the balance sheet, you'll notice, you remember I talked about this, loans and borrowings had increased dramatically from 20 to 88 million. And we can't see that in the balance sheet, and therefore that suggests that a big part of this property, plant and equipment increase is being funded through effectively its leased assets, and so they're showing the liability on the other side of the balance sheet, but there's no actual physical cash flow implications of that transaction. So the summary of our cash flow is that the cash has gone down in the year. It went up significantly in the previous year, mainly through fundraising. So here's the fundraising going on here. It's gone down in this year, even though they've got the fundraising. They're sitting on about 67 million at the end of the year. They're burning cash at a rate at the moment of, let's just go back, 77 million. So if you're burning at 77 million, you've got 67 million in the bank. You've got about a year before you have to go back cap in hand. So what we see with these guys is that, they are, they're leasing their assets. They aren't funded through debt. They're funded through through equity. And if I'm a betting person, they're going to be back at the market cap in hand asking for some more handouts. Now, what's quite interesting about that is that this is very much a jam tomorrow play. Now, I'm not going to comment on the quality of their products. They may have brilliant products and great pipeline of business and letters of intent coming out of their ears, etc., etc., etc. But the stock price will reflect the fact that this is a future investment and not something which is generating jam tomorrow. And so not something that's generating jam today. And jam tomorrow companies really struggle in the world of inflation. Okay, so jam today is much healthier. Jam tomorrow struggles when we start to increase our discount factor in those discounted cash flow calculations that investors are so beloved of. So if we go and have a look at the actual share price and see what's been going on. So as you said, it's been quite a roller coaster ride. I'm not sure we're going to get any kind of insight from the trend analysis or how the stock has been performing, just to say that if you invested when it was 10 and sold at 30, you'd be doing very well. And if you invested at 30 and sold at 14, you'd be doing less so. Market cap is 9 billion. I'm struggling to find any metric that we can, you can't do a multiple of sales. The net asset value is 320 million, and it's 9.23 billion. Don't forget this is US dollars, 9.23, and the balance sheet is obviously in euros. Although there's they're comparable. They're not exact. It's not a 1-for-1 exchange rate, but it's not far off. So it's an expensive company. You know what, Moeed? It's not for me. I mean, it may be a great product, but there's just a little bit too much jam tomorrow and just not quite enough jam today for my liking. I think they've still got quite an uphill struggle in order to convert. And don't forget, if they get into a particular space, people like Tesla, NIO, all the other car companies, Nissan, they're all in the electric space. Very, very competitive. These guys, I'm not convinced that they're going to be able to occupy a part of the business that says that you can justify a $9 billion valuation on them. Okay. But I'm looking forward to being proved wrong, Moeed.
Yeah, this is one where I would love to hear from viewers that know this industry well and can share some insights on this, because this is one where, looking at the technology and looking at what they're trying to do is going to be a big thing. Because I do know they're trying to make the whole electric vehicle element really automated. So the whole transfer of goods from the warehouse into the hands of the person or the machine, and then transferring it to the van, etc. They're actually trying to make that process simpler and quicker. So if they manage to do that well, better than others like Tesla, NIO, and others that you mentioned, then they could be onto a potential winner, and this price could be a steal. But as you say, it's a real punt. So definitely not one for me in my portfolio, but certainly one to keep an eye on. But if you have any, if there are any viewers out there that know this, I would love to hear from you. So as always, like, share, subscribe, leave a note in the comment section if you have another company you would like us to analyze, and we will do it for you. But until the next video, bye from me. Thank you all.
Okay, good to speak to you, Moeed. Catch you later.